Now guys, before I do the technical analysis on this the weekly chart, let me clear this thing that this technical analysis is not a financial advice of any kind. This technical analysis is not an advice to place your trades in the stock market. I use only and only the technicals and the data to give you the weekly technical analysis or the daily technical analysis. So whether you are making 100% profits in a day or whether you are seeing 20-30% losses in a day, it's all yours, because I do not know that how you are going to interpret my technical analysis. Now guys, let's do the S&P 500 technical analysis on the weekly chart. Let me write it down. This is the weekly chart. So weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay. So now there are new developments, okay, in this S&P 500. So the developments, as in, first of all, okay, this is a very heavy bearish candle, and it is saying that there are heavy bearish sentiments in the S&P 500 or in the entire stock market. Okay. Now, other than that, you will notice that now we are seeing this the 200. This is the 200 week moving average again in the picture. So if you have subscribed to my channel, okay, and if you are watching my technical analysis for last many months, then you will remember that I told you in the week of June 13th that it is going to hit this the 200 week moving average, and because this will be the first hit, so there will be a reversal, and then there was a very heavy reversal, okay, because this was the first hit on this the 200 week moving average. Now again this 200 week moving average, it is in the picture. This means that in the next week, so let's see, okay, the next week, if there will be a fall, and if this fall comes out to about this one, then it will be 6.25%, approximately 6.25%. okay. So if there comes a fall that is around 5 or 6%, then probably in the next week, okay, we can expect a breach of this 200 week moving average, okay, because earlier it was able to support, earlier it was able to hold the S&P 500 on the weekly chart, okay. So now, so this will be the second time, in this second time it will not be able to hold. I repeat, it will not be able to hold this the S&P 500, okay. This means this time S&P 500 will breach the 200 week moving average, and then the further downtrend to like 3,500 or 3,000. So the levels 3,500 or 3,000 or 2,900, okay, so that's a different part, so that we will discuss later. So this is a new development in this the S&P 500. Now guys, let's do this the SP500 technical analysis on this the weekly chart. So first comes this the Bollinger Bands. This is the lower band of the Bollinger Band, this is the median of the Bollinger Band. The closing of the S&P 500 is in between the lower band and the median of the Bollinger Band. This means that the S&P 500 is bearish through the Bollinger Bands, okay. Then comes the moving averages. Again, a clear fan out supporting the bear trend, and then the closing below all of the moving averages, absolute bearish through the moving averages. And guys, if you have watched the last and the last to last, means these 3 or 4 weekly technical analysis, then I've told you that S&P 500 is not going anywhere. This is just a reversal. So earlier there was this the fake upward movement. I told you that because this is the fake upward movement, the S&P 500 will see a reversal, because at that time also the moving averages, there was no crossover in the moving averages. And then finally, okay, after this candle, I told you now everything is going bearish. And if you see that a net fall, okay, it was approximately 7.5% from that level, okay, where I told you that now it is bearish, okay. So because there was no change in the moving averages, and now again a fan out and again the moving averages, okay, this will be, so this is something that you are going to see, okay, in the coming week. This means absolute bearish and coming down and coming down, okay. So through moving averages, bearish. Now comes the Ichimoku. So it is trading below the Ichimoku. It is closing it is closing below the Ichimoku. This means that it is bearish through the Ichimoku cloud, okay. Now comes some other technical indicators. So other technical indicators, this is the MACD, okay. So if you see the MACD and the signal, both are negative, and this is what I'm telling you for last many weeks, okay, not weeks but for months, that because both the MACD and the signal both are negative, this means that when we look into when we look into this the broader picture, then both means the S&P 500 is bearish through the MACD, because both the signal and the MACD are negative. Other than that, if you see this the stochastic RSI, okay, sorry, now, as of now, if you see that there is no crossover in the MACD and the signal, this means that MACD is still bullish. It is directionally bullish. See, again, MACD is directionally bullish, but it is losing its momentum. Let me show you. But it is losing its bullish momentum that was there for some time. Okay, when I say bullish momentum, if you see, there were these the dark green candles, and now if you notice that last two candles, okay, so these the last two, this the bar, okay, this is the bar graph. So these the last two, okay, if you notice that these are the light green candles, this means the S&P 500 on the weekly chart is losing its bullish momentum. This is the fake bullish momentum, okay. And within a week or 2 weeks, there will be a confirmed crossover again in the moving average, sorry, again in the MACD, and then it will be absolute bearish. Okay, so now this picture is clear. So it is, as of now, it is directionally bullish, okay, but again on this the broader scale, it is bearish. Then comes the stochastic RSI. If you look into the stochastic RSI on the weekly chart, it is clearly bearish, okay. Then the divergence on this the weekly chart, it is normal, not a problem. If you look into the volatility, it is again like 90%, 90 to 95%, okay, of the all-time high level. Means still the S&P 500 is volatile. Now, through all of the technical indicators, what we have seen that the S&P 500 on the weekly chart is bearish. The only thing, okay, that is supporting the bull trend, okay, the directional bull trend, okay, it is the MACD. Other than that, all of the technicals are bearish. So we will not say that the S&P 500 is absolute bearish, okay. What we will say that S&P 500 is heavily bearish. It is heavily bearish, but it is not absolute bearish. It will be absolute bearish when the MACD will be directionally bearish, okay. So that you can expect to happen in the coming week or in the next week. So through this the SP500 weekly technical analysis, we have seen that the S&P 500 is bearish. It is heavily bearish on the weekly chart. Now guys, again, if you're not subscribed to this channel, then please subscribe the channel and click on the bell notification icon, so that you can get the timely notification of the weekly technical analysis and other informative videos. And other than that, guys, if you have not joined my YouTube membership yet, then you can join my YouTube membership in order to get the daily analysis of the S&P 500 in terms of the notes and in terms of the video. Now guys, let's move on to our next topic, and our next topic is the food scarcity, that how the food is going to impact, or how the food scarcity is going to impact the overall or the global stock markets in the coming weeks, months, or in the next year 2023 and so. Now guys, we are going to talk about the food scarcity, that how the food scarcity is going to impact the global stock markets. Okay, the food scarcity. Okay, scarcity. So how the food scarcity is going to impact the global stock markets. So in order to understand, okay, in terms of the data, in terms of the technicals, okay, this is the food thing. So you need to look into the inflation. Okay, this is the chart of US inflation rate. Okay, United States inflation rate, and the ticker is USIRYY. This is the ticker of the United States inflation rate year on year. Okay, now you will notice that in the month of July, the inflation, it came down to 8.5. okay. Now as such, what we see, okay, or what we consider, okay, so when we say inflation, when we say that there is inflation, okay, inflation, then what we see, we look around, okay, and we look into the cost of the products, okay, cost of each and everything, okay, that is around us, okay, daily use and everything, okay, from small items to big items, we look into the cost, okay. And what we also look into is the fuel, okay, is the oil. So oil, so whenever we look into the inflation, okay, we also look into the oil, okay, whether the oil price is moving up or not, because when the oil price will move up, that, so this means that the inflation will move up, because oil is a major contributor to the inflation. When the oil price will move up, okay, then the transportation cost, it will increase. So whether it is whether it is by land or air, okay, or sea, that transportation cost will increase. When the transportation cost will increase, then that will increase the cost of the products. When the cost of the products will increase, then overall the inflation will increase. Okay, so this is the cycle. Now what we forget, okay, or what we have not considered, okay, as of now, is the food. So when I say food, I mean the bread and the vegetables. Bread means wheat or rice. Wheat or rice. And vegetable means, okay, all of the vegetables and the fruits. Okay. Now, vegetable, okay, so vegetable is one thing, but the most important thing is the bread. Okay, every human being, okay, is dependent on, so every human being on this the planet earth eats the bread in some form. Okay, so it depends, okay, from country to country, but everyone, okay, eats bread. Okay, so whether it's the wheat or whether it's the rice, everyone eats the wheat or the rice. And now that is the problem, and this is where the problem comes: the wheat, rice, and the vegetables. Why the problem? So if you have seen, okay, recently, okay, because of this the global warming, okay, I'm not going to discuss this the global warming in detail. Because of this the global warming, what we are seeing, that in some countries there, so there is, very very heavy flood, very heavy flood. Okay, almost half of the country, okay, it is flooded. Okay, or in some countries there is a very severe drought, or almost like most of the part of the rivers, okay, it is dried up. It is dried up. Okay, so one example if we take, okay, is this the Europe. So if you look into the Europe, so there is, so in this the Europe, okay, there is a severe, okay, this condition, this particular, this the drought condition. Okay, so whether it's Germany, whether it's Italy, okay, France, or the Netherlands. Okay, so it means the Europe is seeing this the drought, the rivers are drying up. Okay, and if we talk about this the US, then this the Hoover Dam. Okay, so this is the famous dam, Hoover Dam. Okay, and this the Hoover Dam, okay, it is built on this the Colorado River. Okay, so this the Colorado River. Okay, and this is just one example, the Hoover Dam and the Colorado, and this the Colorado River. Okay, so this the water level, okay, it has come down significantly, as we have not seen in last many years, or in like once, or in like almost a century. Okay, so the dams, rivers, the water, this the water scarcity, and then in some countries there is this the flood. Now other than that, okay, we have the war. Okay, war between the Ukraine and the Russia. So Ukraine and Russia are the major wheat exporters. Okay, Ukraine and Russia are the major wheat exporters. Okay, and then the South Asian countries, okay, or the Asian countries, they are the and some South American countries also, they are the major rice exporter. But now everywhere, okay, either there is a drought, either there is a flood, or somewhere, okay, we are seeing the war. This means that the scarcity of the food, okay, we are clearly seeing the food scarcity. We are seeing the impact. Okay, we are seeing the price. We are seeing that the price of the wheat, rice, okay, and the vegetables, fruits, it is moving up. It is going up. Okay, so earlier if you were spending, so for example, 5 years ago, okay, if you were spending like $500 a month, okay, on this the food bill, okay, that is now almost like more than or about $1,000, or like $800. Okay, so there is, and in some countries this is like $1,500 or $2,000, 3 to 4 times. Okay, so now this increase in price, okay, is going to create a problem for the inflation. It is already, we are seeing on this the 40 years high level. 40 years, 1977, 1980s, okay, more than like 40, 45 years. So this thing, okay, the food and the vegetable, this is going to now, so earlier it was the oil, Earlier it was the oil, but now the food is going to become a major contributor to the inflation. Because see, we can live without oil, that is not a problem, but we cannot live without the food. Okay, the food is the essential thing. No one can live without the food and the water. Okay, and the food and the water is the thing, okay, that we are seeing the scarcity. Okay, drought or the flood, okay, or the war. So everywhere everyone is seeing this thing. Okay, so food is now so it is now going to or it will be, or it not it will be, but it is now a major contributor to the inflation. Okay, so oil, earlier the oil used to be the major contributor of the inflation. What it means? It means even if the oil prices comes down, even if the oil price come down, okay. So as of now, it is like 93 or 94, okay, dollars a barrel. And in this week, okay, it was so it was trading on and around $100 a barrel. Okay, so even if the price comes down to like $60, okay, or to like $50, it is not going to compensate the inflation because of the food, okay, because oil cannot produce food. This means that even if the oil prices comes down, the food prices are going to increase. Year on year, the food prices are going to increase, and that increase will result in the inflation. Okay. So if you are seeing, for example, okay, again, let me clear this the drawings. Okay. So again, if you see that as of now, the inflation is what? Inflation is 8.5. Okay, and there are many people who are saying that we compare the inflation. Okay, like 1 year ago, so like what was the data? Okay, what was the inflation 1 year ago? And if we compare that thing, this means that in the month of December only we will see a negative inflation. Okay, this is untrue. This is not true. This is not going to happen in some form, whether it's the oil, whether it's the food. Okay, the price or the inflation will, or so either it is expected to move up, or it is expected to hold around either this level or around this, the moving average. So when we see, when we analyze the data, when we and when we talk, about this, the technicals are bullish. Okay, and so these all of these technicals are bullish. The only technicals, okay, the only technical that is bearish is the stochastic RSI. Okay, but the most important technical is the MACD, and these the moving averages. MACD and the moving averages are supporting an increase in the inflation. Okay, but stochastic RSI is saying that there will be a breather in the inflation, but it will not come down. So it is not an indication that the inflation will come down. It is simply saying a breather in the inflation, nothing else. Okay, so until and unless the MACD comes down, okay, and there is a crossover in the MACD, and that we see that the stochastic RSI is also bearish, we cannot say that the inflation is coming down. Technically, guys, again I repeat, technically, whatever I see, whatever I analyze, okay, is the data. It is all through the technicals. Okay, so now what we have seen is that the inflation, okay, as of now, yes, it can come down, okay, to what level? To 8.2, okay, or to 8 point, like if we consider this moving average. So last, in the month of June, the moving average was at 7 dot this was at 7.18. Now it was 7.38. So we can expect 7.5. So we can expect a breather around 7.5, okay, or 8.0. If some miracle happens, okay, then only we can see the inflation is coming down in the month of December to like 2% or 2.3%, but it will not be negative. It will not be negative. So it is for all of those people, okay, who are analyzing the data and who are thinking that based on the previous year data, if we are comparing this thing and that thing, it will come down. No, that is not going to happen, because either the oil or the food will keep it at its toes, and also that thing is also supported by the technicals. Now because the inflation, it is not coming down, okay, and feds are very much concerned, okay, and feds are fearful, again I repeat, feds are fearful that the US economy can see a stagflation. Stagflation means that the inflation will move up, okay, the prices will either move up, okay, or will remain, okay, where they are. Okay, so inflation, so the stagflation will be there, just like we have seen in 1970s, 1970s, And guys, this is the same thing that I've told you again and again in last 3 or 4 months. Okay, I think this is what I'm telling you from the month of April or June, and practically we are seeing that thing. Okay, in the in there. Okay, in this the chart. Okay, in the market. So this is the 1970s, and what was there in the 1970s? Very high inflation, extremely high inflation. Okay, and then Feds and the government was forced, compelled to bring the economy into the recession. Unwillingly, it was compelled to bring the economy, force the economy into a long-term recession. Okay, because and they were forced to slow down the economy. Okay, because slowing down the economy, only the slowing down the economy can fix this the inflation. Okay, otherwise it will not be fixed, and that is the fear of the Feds. Okay, so now I have told you this the Fed thing, this the food and the oil, and guys, I'm not going to repeat, okay, what I mentioned in my previous technical analysis. This is the inflation and last 2 lines. So almost in every technical analysis I am giving you, some kind of this. Okay, so if you are new to my channel, if you have not subscribed, okay, then you can subscribe and you can watch my previous technical analysis. So I have created the sections. You can watch that particular section, okay, regarding this the inflation and everything. So as of now, the food prices are going to increase because of this the drought. Okay, so this the drought in the US, in the Europe, and the flood in the Asian countries. Okay, so food production, it will decrease. Food production will decrease. Vegetable and means the vegetable, okay, wheat and everything, the production will decrease. That will result in the increase in price, because see, for once you can deny to buy a Tesla car. Okay, you can say, okay, because the Tesla car is costly, I'm not going to buy a Tesla car, I will buy some other car. But you cannot deny, it is impossible, next to impossible, you cannot deny, you cannot say that, okay, I'm not going to eat the bread, I am not going to eat the rice, I'm not going to eat the meat, I'm not going to eat the vegetable. This is next to impossible. Now I hope you have got some idea, okay, about this the food and the oil thing, okay, how this is managed and how the inflation, and why the Feds are worried, and why all of the Feds, the Fed chairman, okay, and all of the Fed presidents, okay, they are hawkish, and all of them, okay, they are compelling the stock markets to come down. They are forcing the stock markets to come down. Okay, because they have to. If they do not, in that case the situation will become worse, much worse than what we have seen in 1970s. So guys, now we have discussed this the inflation. Now let's move on to the daily chart, of the S&P 500. So now I will do the S&P 500 technical analysis on the daily chart. So okay, so before that I will give you the support and resistance levels. So guys, now we are on the daily chart of the S&P 500. This is the daily chart. Okay, let me write it down, daily chart. So daily chart means one candle represents one day, not 1 week, okay, or 1 hour. One candle means one day. So now let me tell you the support and resistance levels, and thereafter I will do the S&P 500 technical analysis on the daily chart, and then finally, okay, I will deduce, or I will give you the probable movement of the S&P 500. And guys, again, there are sections of this video. If you want to skip a section, you can, okay, but I will not advise you to skip, because every section is very important and very informative and very valuable. Okay, so now the support and resistance levels, right? So the support and resistance levels, so as of now we have this the 4110. It is going to act as a very strong resistance, or you can say that the final resistance, okay, for the S&P 500 in the coming week. I'm not expecting the S&P 500 to breach 4110 in the coming week, and I'm not even expecting the S&P 500 to hit the 4110. Okay, but still, okay, because this is the stock market, okay, and anything can happen. But again, as of now, I'm not expecting anything above 4110. So 4110 is going to act as a very strong, or the final resistance for the S&P 500. Then comes the next resistance at 4065. So 4065 resistance, okay, yes, there are chances that if there comes a reversal, okay, so I will tell you that because the S&P 500 was able to hold above the trend line, and if it survives, I repeat, if it survives on Monday, sorry, on Tuesday, okay, Tuesday will be the September 6th, 2022. So on September 6th, 2022 Tuesday, if the S&P 500 is able to survive, okay, above this that trend line, then only we can expect, okay, a reversal, and that reversal, okay, can be up to 4065, okay, at most. Then next comes a very good resistance at 4035. So this 4035 is, yes, this is in, so this is in the picture, this is in the picture, and this was the same thing that I was telling you earlier in the month of May, June, okay, that the 4035 is a very strong resistance. So as of now, any reversal will be confined to the 4035. Why I am saying that it will be confined or it will be restricted to 4035? Because 4035, okay, it is a resistance. Secondly, the moving averages on Tuesday, okay, on September 6th, okay, and by this the September 9th, that will be Friday, the moving averages will be around, or sorry, will hit and breach this the 4035. And because whenever the S&P 500 or this the SP500 will see a retrace, that retrace, okay, it will find, means a very heavy resistance because of the moving average. So it will be tangled between the moving averages, and then finally it will have to give up and to be bearish. Okay, again guys, the market is bearish, the S&P 500 is bearish, the Dow Jones is bearish, Nasdaq is bearish, and any retrace is an opportunity. What opportunity? Bearish opportunity. So that is the reason, okay, 4035 is going to act as a very strong resistance for the SP500 in the coming. Thereafter comes the next resistance at 3990. Okay, this is what I told you in last week also, that 3990 will act as a good support, okay, whenever it comes down, and it will find some breather at 3990, and thereafter, after breaching the 3990, then we have, other support levels as of now. But as of now, because the closing was at 3924, the closing was at 3924, this means that 3990 is going to act as a very strong resistance, okay, for the S&P 500, for the S&P 500. Then comes the next resistance at 3937. So 3937 is going to act as a immediate resistance, And guys, if you notice that in my final update yesterday to my community members, okay, I've given them this these support and resistance levels, okay, the downtrend and the uptrend. So what I've told them, that in the uptrend, that immediate resistance at 3937, if S&P 500 closes below 3937, then the next resistance at 3965, 3990, 3980, and then the final resistance at 4035. Okay, so I told them when the market was in session, means when the S&P 500 was in session, that if there comes an uptrend, okay, then this is going to happen. Means these levels are going to act as the resistance levels for the S&P 500. And for the downtrend, I told them that for the S&P 500, the immediate support will be 3937 if the S&P 500 closes above 3937. Okay, see again guys, this was the final update. This was the final update, and I give the final update, okay, so I give them the final updates, okay, before the closing of the S&P 500, before the closing of the stock market, so that my members, okay, they can plan their trend, so that my members, they can plan their trades for the next day, okay, in order to make some good profits. So I have told them that the downtrend, immediate support at 3937, then the next support will be 3907, 3900, then the next support at 3884, then 3840, and then the 3790. Okay, and the same thing I am going to tell you here. So immediate resistance at 3937. Okay, and then when it comes down, then the immediate support will be at 3884. This will be 3884. Okay, then this will be the 3840. So 3840 earlier has acted as very good support. Okay, so 3840. Then comes the 3790. Okay, a very good support for the S&P 500. Now guys, I need to talk about other supports. See, these supports that I'm giving to my the support or the resistance levels, okay, I'm giving to my members. So I give them this for 1 to 2 days, because I'm giving them the daily analysis. Okay, so I need not to tell them that what is going to happen in the week also. Okay, I give them the daily analysis, and they know what is going to happen on that particular day. Okay, and then the coming day, and then the next day, so that they can plan and they can make money. So the support at 3790, then the next support at 3735. Now it is back into the picture, 3735. Then the next support at 3675, and then finally a very good support at where, at 3630. Now we are talking about 3630 again after 2 or after 3 months. I told you that we will be talking about this support. S&P 500 is not going anywhere. Okay, this upward movement that you were seeing earlier, okay, this was the fake movement. I've told you this was the fake upward movement. And why it happened? Because of a mistake, because of a verbal comment from the Fed chairman. And that is the reason why the Fed chairman and the Fed president and the Fed presidents, okay, they are trying to fix their mistake. They are trying to fix this thing. And I'm not going to argue with the hedge fund managers or the hedge fund analysts who are saying that we will be seeing 5,000 by the end of December. That is not going to happen. Okay, so they have their own purpose. Okay, and I know, and I've told you that why they are repeatedly saying this thing. Okay, so they want to trap and they want to make money. Okay, they want to target the retail traders. But the good thing is that, okay, even though like there are many traps, okay, they and these traps are formed in the stock market, okay, in the S&P 500, Dow Jones, okay, but my community members, okay, I keep them updated about the traps. So I tell my community members that, see, there are the traps and this is how you are going to avoid the traps, and this is how you are going to make money, okay, even in the trap. Okay, so I give them this the thinking that what the hedge funds are thinking, what the market manipulators are thinking, what the big ones are thinking, and how to win these the big ones. Okay, through my these the community notes and the daily analysis. Okay, anyways, so let's restrict to this the movement. Okay, so the movement in the coming week. Sorry. So the movement in the coming week, okay, it will be from 4035 to 3840 to 3630. Okay, that's it. That will be the movement. Okay, but again guys, this is the 4035. I've told you. Okay, if for some reason the chances are very low, very thin, but if for some reason if there comes a breach of 4035, then no need to panic, because S&P 500 is not going anywhere. Okay, it will then move to 4065 and finally 4110, and then it will give up. Okay, so guys, these were the support and resistance levels for the S&P 500. Uh, now let's do the S&P 500 technical analysis on the daily chart. Now let's find out if so whatever we have seen on the daily chart, or whatever we have seen on the weekly chart of the S&P 500, if the same thing is happening on the daily chart or not. And if the same thing is happening, then most likely we are going to see, okay, the further fall in the S&P 500, and then I will tell you that what kind of fall it will be, whether you will be seeing the red candles every day, or they will be like red or the red green. So I will give you that the probable movement. Okay, after this the SP500 analysis on the daily chart. So now guys, I'm here on this the daily chart of the S&P 500. So now let's do the S&P 500 technical analysis on this the daily chart. Now guys, there is one more important thing, okay, that I want to share with you. So this is for all of those people, okay, who have not joined my YouTube community yet. So guys, if you want to join my YouTube community in order to avoid the traps, in order to get the daily analysis, in order to play safe in the S&P 500, in the Dow Jones, in the Nasdaq, and in order to make money, so you can visit my YouTube channel page. This is my YouTube channel page, and I've given the link in the description of the video and also in the comment section. Okay, so you can click on that link. So once you visit this page, okay, this is my YouTube channel page, then you will see that there is the join button. So you need to click the join button. Now once you click the join button, then you will see that there will be only one midweek update or all midweek updates. So when I say midweek update means the daily update. Okay, so only one midweek update means that you will get the analysis only for one day, the notes or the videos only for the one day. Okay, and all midweek updates means that you will get the daily analysis every day from Monday to Friday in the form of videos, in the form of community notes. Okay, more than 95% of my members have joined the all midweek updates, means they are getting the daily analysis of the S&P 500 from Monday to Friday, and that is really very helpful for them. Okay, now guys, if you notice that my members, okay, they have opted for the all midweek updates in the form of, so when I say all midweek updates means the daily analysis, okay, from Monday to Friday in the form of the notes, in the form of the videos. Okay, and that is really very helpful for my members. So guys, whenever you want to join my YouTube community, you are welcome to join. Now let's do the SP500 technical analysis on the daily chart. So first comes what? First comes is the Bollinger Bands. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed in between the lower band and the median of the Bollinger Band, this means that the S&P 500 is bearish through the Bollinger Bands. Then comes the moving averages. Moving averages, first of all, the S&P 500 has closed below all of the moving averages. It is bearish. Secondly, there is a clear fan out, there is a clear crossover in all of the moving averages. And if you have watched my previous technical analysis, previous weekly technical analysis, I told you that in this week, okay, in this week there will be a confirmed crossover in all of the moving averages, not just in two but in all of the moving averages. And on Friday, finally there was a confirmed crossover in all of the moving averages. Now all of the moving averages are in order, in a bearish order. Okay, so after what? So after almost a month, okay, all of these moving averages are again in an order. So through the moving averages, again S&P 500 is bearish. Then comes the Ichimoku. Now, because the closing of the S&P 500 was inside the Ichimoku, this means Ichimoku is going to act as neutral. Earlier the S&P 500 was so it has closed above the Ichimoku cloud, and that was the reason I told you that only through the Ichimoku S&P 500 is bullish. But now because it has closed inside the Ichimoku cloud, this means through Ichimoku it is neutral. So the other technical indicators, if you see, this is the MACD. MACD is less than the signal, okay, and the MACD is negative, and the MACD is negative. Finally, the MACD is negative. This means that there are very heavy bearish sentiments in the S&P 500, in the Dow Jones, in the Nasdaq. Okay, and soon the signal will also be negative. So as of now the MACD is less than the signal. Directionally MACD is bearish, okay, and on the broader chart it is bearish. Then comes the stochastic RSI. Now this is the stochastic RSI. Okay, if you notice that the K channel is 1.23, 1.23, and the D channel is 0.82, 0.82. Okay, so as of now the K is just marginally above the D channel, but both K and D are less than 10, less than 5. This means that the stochastic RSI is absolute bearish. Whenever both K and D are above 90, okay, we say that it is absolute bullish or very heavy bullish. Whenever K and D are less than 10, then it is absolute bearish or very heavy bearish. Okay. Now there is an interesting thing with this, the K and the D channel. Okay, and I will tell you that why we have seen a red candle and why we haven't seen a green candle on Friday. Okay, so then comes what? Then comes the divergence. As of now, divergence is it is normal. Okay, it is in control. Divergence means the divergence in the closing prices of the candles, that is normal. Then comes the volatility. Volatility is increasing, but it is not still at the all-time high, but it is increasing. Okay, means the S&P 500, this the SP500, okay, it is becoming more and more volatile. Okay, now so this was this was the SP500 analysis on the daily chart, and what we have seen is that the S&P 500 is clearly bearish on the daily chart, or heavily bearish on the daily chart. Okay, no technical indicator is supporting the bull movement. Even the Ichimoku is saying, okay, now because it is inside the Ichimoku is going to act as neutral. So as of now, no technical indicator is supporting the bullish trend. Okay, guys, again, my technical analysis or my analysis of this, the S&P 500, is based on the technical, okay, and the data. So now this is clear that on the daily chart, the S&P 500 is bearish. Now guys, let's deduce the probable movement of the SP500 in the coming week. So like for example, what we are going to see, that what is going to happen on September 6th, 2022 on Tuesday, how the S&P 500 will will behave, then on September 7th, then September 8th, and finally we will see that how the S&P 500 will behave on Friday, on September 9th. Okay, so now I will give you the probable movement of the S&P 500 from September 6th, Tuesday, to September 9th, Friday. Now guys, let's see how the S&P 500 is going to behave or is going to trade in the coming week. Okay, that will begin from September 6th, Tuesday. First of all, guys, you need to understand why there was, okay, this the bear candle, this the red candle and not a green candle. Okay, if you have seen the job data, so there was the monthly job data. Okay, the Wall Street has expected 318,000, okay, the jobs, and the job data, okay, it came out 315,000, less than anticipated. So this was a good news for the Wall Street, but the bad news for the economy. Okay, or you can say that because there was not much difference, okay, in these numbers, this means that it was a neutral news, neutral for the economy, or you can say good for the economy, that there are jobs available, okay, in this in the economy. Okay, and for the market, for the stock market, okay, it was neutral or it was bearish. Now, what was the impact of this 315,000 or this the flat, this thing? Okay, so I told my community members yesterday. Okay, so in this the pre-market update to my community members, I told them that because the non-farm payrolls are flat. Okay, so Wall Street expected 318,000 and the real number is 315,000. So there is not much change because the non-farm payrolls are as expected, neither more nor less. This means Feds will go as planned, as planned. Okay, and what is the plan of the Feds? To slow down the economy, to raise the interest rates. Okay, to go bearish. This means that no relief can be expected from the Feds, and at the same time no further aggression will be added to the Feds who are already going very aggressive. Okay, so I told them that non-farm payrolls will act as either as neutral or bearish. Why bearish? Because the numbers shows that economy is holding and doing well in terms of non-farm payrolls, and Feds can go as planned, means the bearish. This means that this means an upward push that was supposed to be there in the S&P 500, that push was not seen. Okay, not just the S&P 500 but Dow Jones, okay, and the Nasdaq. So this upward push, okay, it was not seen. But other than that, if we look into the technical, see, these were the numbers, 318,000, 315,000. But if we look into this, the technicals, okay, so what has happened is that on this day, on September 1st, the stochastic RSI. So on September 1st, the stochastic RSI, the K channel and the D channel both become zero. So whenever the K and the D become zero, okay, that is an indication, or that says that now there will be this the upward movement. Now there will be a reversal in the market, in the reversal in the index, S&P 500, Dow Jones, okay, or the Nasdaq. Okay, so whenever both K and D are 0. So there was the trend line. Okay, that was one thing. There was a trend line. S&P 500 was supposed to hit the trend line and it was supposed to get a reversal. Other than that, the second factor that has worked here, okay, so this was the update I gave to my members. Okay, so this update, I told them that because we are going to see a gap down open and are anticipating a fall immediately upon open, thus you are advised to book your profits. So my members, okay, they have booked the profits on that particular day. Now, okay, the most important part is that I told them that remember the trend is absolute bearish with heavy bearish sentiments. The bullish reversal is because, or will be seen because of the trend line and the K and the D channels of the stochastic RSI, and nothing else but only because of the technicals. Okay, so I told them that because we are going to see a 0 in the stochastic RSI on 1st of September. Okay, this means that a reversal, this means that number one, book your profits. Okay, so they have booked the profits. Number two, that we will see, or we are anticipating an intraday reversal, because whenever 0 and 0 is seen, sometimes the market, sometimes the index is able to hold at 0. So I told them that if the S&P 500, if the stock market is able to hold at 0, then not a problem. On Friday, okay, we will see a good bullish reversal because there will be the 0. And if it is ruined, if this is ruined, the 0 setup, in that case we will see an intraday reversal. And this was the intraday reversal that I have talked about, okay, to my members. Now the question is that, okay, the setup has ruined. Okay, there was an upward movement, then it came down. Fine, that is fine. Now the question is that what is going to happen? So because this particular setup, okay, it has been ruined. Okay, it was not there. So what will be the impact of this setup in the coming week on the S&P 500? Okay, now let me show you the impact. Okay, impact means if you see currently I've told you that currently I told you that this what the stochastic RSI, the K channel is at 1.23, and the D channel is at 0.82. Okay, 0.82. Okay, so this means that just one more very heavy candle or two heavy candles, okay, will again bring it back to 0 and 0. Okay, again a perfect situation or a perfect scenario for a bullish reversal. Okay, now what it means in terms of this the movement, this means that, see, as of now, I cannot comment on the open, on Tuesday. So whether we are going to see a gap down open or a gap up open. Okay. But the kind of movement, the kind of movement that was that we have seen Friday. Okay. And some other technicals, they are there. Okay. They are saying that we are most likely we are going to see a gap up open or any open but up, but any open but above the trend line. But again guys, okay, this I'm not confirming this 100%. Last week I told you that 100% there will be a gap down open and it will come down upon open. That was 100% true. Okay, I mentioned. But this week I'm not saying that 100% this is going to happen, because yesterday on Friday there was a very heavy fall, okay, in last 30 minutes. This means that if there comes a gap down open, then there will be this the bearish breakout. So I'm going to talk about this the bearish breakout, okay, very soon. So now before I tell you this, that whether we are going to see an upward movement or the downward movement, I want to show you this thing, okay. So number one, okay, we have seen that the S&P 500 was able to survive above the trend line. Okay, so this is a positive indication. This is a positive indication. Okay, two times it was able to survive above this the two times. Okay, then I want to show you this the Dow Jones. Okay, so if you see the Dow Jones, okay, again survive. So Dow Jones was able to survive above its trend line. So this closing above this the trend line, okay, it is again a positive sign for the Dow Jones. Okay, now the most important thing, okay, comes into the picture. It is the Nasdaq. This is the Nasdaq composite, and the symbol is IXIC. IXIC. So see, this is the technical analysis of the S&P 500, right? But now question is that why we are looking into the Nasdaq Composite Index. Okay, so I've told you that sometimes, not always, but sometimes the Nasdaq gives you an early picture of what is going to happen. Okay, in the entire stock market, or in the Dow Jones, okay, or in the S&P 500, because Dow Jones and S&P 500 indexes, okay, they are the heavy indexes. Okay, heavy. Okay, and this is the Nasdaq. Okay, Nasdaq we do not consider it as a heavy index. Okay, so now this is the Nasdaq, and guys, other than the Nasdaq, okay, we also look into the SX5E. Okay, that is the Euro Stocks 50 index. So whenever I do this the daily analysis of the S&P 500, I always consider that so whenever I do this the daily analysis of the S&P 500 for my community members, I always use this the SX5, the Euro Stocks 50 index, in order to see what is happening in the European market and what will be the impact of the European market on the American market. Okay, this the Nasdaq composite and the European markets are the early indicators of what is going to happen or what we are going to see in the stock market. Okay, in the American market. So if you notice, first of all, the Nasdaq was able to hold above this thing. Okay, it's a trend line. Number one thing. Okay. Number two thing, the most important thing is that this is the 61.8% of the Nasdaq. This is the 61.8% Fibonacci retracement level of the Nasdaq. So if you see that this level, okay, it was sourced from June 16th to August. Okay, so it was June 16th to August 16th. Okay, so when we apply the Fibonacci retracement, okay, then we will see that this is the 61.8%, okay, for the Nasdaq. Okay, so number one thing is that it was able to hold above the trend line. Number two, that it was able to hold above the 61.8% 2 consecutive days. Okay, now comes the number three most important thing that we have not seen in last many years in Nasdaq. Now, what is that? That is the stochastic RSI trading at absolute zero, absolute negative zero. As of now, for last 2 days, okay, the K channel is zero minus 0.00 and the D channel is minus 0.00. So an index, this is Nasdaq Composite is an index, it's not a stock. Okay, in stock we can see, this is the absolute zero, K and D are 0 and 0 for like 4 days, 5 days a week. Okay, that is normal in case of stocks. But in case of the index, okay, Nasdaq is an index. In case of an index, seeing 0 0 or negative 0 0, absolute this the 0 0 negative 0 0, okay, 2 consecutive days, 2 days or more than 2 days, okay, that is really very surprising. That simply indicates that sooner or later we are going to see a bullish reversal in the market, in the index, whether it's the S&P 500, whether it's the Dow Jones, whether it's the Nasdaq. So now I have given you three reasons. Number one is that it was able to hold above the trend line. Number two, it was able to hold above its 61.8%. And number three, 2 consecutive days, on September 1st and on September 2nd, it was trading. The stochastic RSI, the K and the D channels are negative 0.00, okay, indicating a bullish reversal. Okay, now when we apply the same thing in the S&P 500, see, we are talking about, this video is all about the SP500 analysis. Okay, so when we apply the theory of the Nasdaq, or whatever we have seen in the Nasdaq, when we apply the same thing in the S&P 500, then what we are going to see? Okay, what we are going to see, let me tell you. Okay, what we are going to see. So this thing is that, number one, that the chances of seeing an open above the trend line, okay, or maybe a gap up open, are heavy as compared to the chances of seeing a open below the trend line. Okay, see, everything will be defined by the open on Tuesday, on September 6th 2022, because if there comes a open below the trend line, then it will be considered as a bearish breakout and then a fall and fall. Okay, so this thing is simple and clear. There is nothing much. Okay, so if there comes a gap down open, and this gap down open, okay, is below this level 3907. Okay, if this is below like 3907, okay, in that case, or not just 3907 but on Tuesday, okay, yep, so you can say if an open is below 3907, then it will be considered as a bearish breakout. In that case, you can see an immediate fall, an immediate heavy fall, or it can try to give you a retrace, but it will fail and then again a fall, means a fall and fall. Okay, so either there will be a straightforward fall, or it will try to give you an immediate retrace. Okay, then it will try to show you that no, it is not giving up, but practically in general, okay, it is going to give up. So if you are my community member, if you have joined my YouTube community, then you need not to worry about this. You need not to be concerned about this, because I will give you the daily analysis, and I will keep you posted. Okay, so I will keep you posted, okay, on the movement, and accordingly, okay, you can enter into the market, you can enter into the trade, and you can make some good money. Okay, so and for the people who are not yet my community members, okay, I have given the link in the description of this video and also in the comment section, so you can use that link to join my YouTube community. And also, if you have not subscribed to my channel, then please subscribe the channel and click on the bell notification icon, so that you can get the timely notifications of the weekly technical analysis and other informative videos. So now this the gap down open, okay, it is simple, and whenever it comes down, then the support at 3884, 3840, okay, this is 3840, then 3790, then 3735, then 3675, okay, and then 3630, etc. So the downward movement, it is simple, nothing. So there is nothing more to talk about. Chances of seeing the open above, so you can say like there are more than 65% chances, okay, to see an open above the trend line, and less than, okay, 31st or less than 35% chances to see an open below the trend line. So this is the downward trend. Okay, it is simple, and from Tuesday to Friday, okay, there will be some ups and downs. So I will keep you posted through the community notes, okay, and the daily analysis through the video. So now let's talk about this, the upward movement, okay, because it is going to be a bit complex. Okay, now this is the upward movement, okay, because we are anticipating, because we are seeing that there are more than 65% chances we are going to see an open above the trend line. This means that whenever the stock market opens, okay, above the trend line, then at first it will try to come down to hit that trend line once again, one more time. The same will happen in the Dow Jones, the same will happen in the Dow Jones, the same will happen in the Nasdaq, okay, in all of the indices. So whenever there comes, an open above the trend line, then first it will try to come down, and even if you see that it is trying to move up, not a problem, because again it will try to come down, because chances of hitting the trend line one more time are very, very heavy. Now I'm not saying that it will be able to breach, okay, because the Nasdaq, most likely the Nasdaq will not let that happen, okay, and because the Nasdaq is giving us, okay, a very heavy this probability, okay, of seeing a bullish retrace. So this means that Nasdaq will not let the breach happen, okay, and Nasdaq will not let it go bearish, okay, very soon. This means that whenever it hits the trend line, then there will be an upward movement, means a bullish reversal, and that this reversal will come because of the Nasdaq, not because of the Dow Jones, not because of the S&P 500, but only and only because of the Nasdaq. Okay, this is clear, right? Now any reversal will first see, okay, a resistance at 3937, okay, but because as of now it was able to, okay, hold around the 3937, so I'm not anticipating, or I'm not saying that 3937 is going to act as, or is going to pose a very heavy challenge to this the upward movement. Means the S&P 500, it should be able to breach the 3937, okay, with a little push, okay. Means you can see that it is struggling around 3937, but after some time it will be able to breach, okay. So all we need to look into the movement of the Nasdaq. If there comes a heavy movement, then 3937, it won't be a big problem. Now the next problem that comes into this the picture, okay, it is the 3990. Yes, okay, 3990, indeed it is going to act, or it is going to pose a big problem for the S&P 500, for the Dow Jones, for the Nasdaq. Okay, see, all of this exercise that we are seeing here, this exercise will be there only and only to cover the absolute zero, that the index would like to see some non-zero numbers, okay, non-zero numbers. So if there comes a reversal on Tuesday, on September 6th 2022, if there comes a reversal, okay, in the Dow Jones, in the S&P 500, in the Nasdaq, in that case, this the stochastic RSI, which is, okay, the K and the D channel, okay, that are 0 0, these will become non-zero, okay, and that will be the exercise, so that will be sufficient, okay. Now whenever there comes a retrace on Tuesday, okay, then the 3990, okay, it will create, okay, some good resistance for the S&P 500, okay, and we will have to see whether it will be able to breach. Let's see, okay, how much percentage that will be there. So it will be like 1.6%, or 1.6%. So there must be a 1.6% upward movement in order to hit the 3990, okay. Now as of now, let's say that on Tuesday the movement of the S&P 500, okay, it will be up to 3990, right? So there is a movement, okay, on Tuesday up to 3990. Now comes Wednesday. So Wednesday will be September 7th 2022, the Wednesday. So on Wednesday, what will happen? On Tuesday, this moving average will hit, okay, this particular level, right? Okay, then these moving averages will follow also. Now on Wednesday, this moving average, okay, it will be trading around somewhere around this level, okay, 4013 or 4015, okay, etc. Okay, so on on Wednesday, on Wednesday, this moving average will be around 4015 or 40, means around 4015. This means that if we see a bull candle on Tuesday, then on Wednesday we can further expect an upward movement. This upward movement will hit this the moving average, okay, and intraday we can see that either that it is hitting the 4035. Chances are low, okay, but still we can see that it is hitting the 4035. And guys, once again, okay, the parameter of this the moving average and the other moving average, okay, so I will give you through the community notes. Okay, so if you are my member, community member, I will give you the parameter of the community in the community notes, so that you can use that particular level, okay, to go bearish. So on Wednesday, okay, it is expected to hit this particular moving average. Okay, after hitting, there will be only two scenarios: either it will hold, okay, or it will come down, because the S&P 500 is bearish, because the Dow Jones is bearish, because the Nasdaq is bearish. Thus, the chances of coming down are very heavy, very heavy on Wednesday. Okay, so this means that on Wednesday either it will hold or it will come down. Now on Wednesday, whenever it come down, or if doesn't come down on Wednesday, then on Thursday, okay, it will come down, because see, it has to come down, it cannot hold, okay, for very long. And because this is going to act as a lower high, okay, so whenever you see that it is struggling, okay, around this level, okay, or maybe like 4000, maybe, so means it depends on the value of the moving average, okay, or the value of the other moving averages also, okay. So whenever it will struggle, okay, in this the moving averages, then that will give you an opportunity, that will create an opportunity, a lower high. And what we do on the lower high, we sell. We sell means either we go short or we buy put options. So you will now you will enter into the market, okay, at this particular level. Now because it has holded one time, two time, and the third time it will hold on Tuesday, then there will come this the fourth time. The fourth time it will not be able to hold, and the fourth time it will breach the trend line, and then there will be a bearish breakout. So this bearish breakout, okay, we can anticipate like on Thursday, okay. Thursday will be September 7th, sorry, Thursday will be September 8th. So September 8th, Thursday, okay, we can anticipate this the breakout. And if not on Thursday, then yes, on Friday, okay, we can anticipate this the breakout, the bearish breakout, okay, on September 9th, Friday. Okay, now the chances of seeing a hold, that the S&P 500 is holding above the trend line for the entire week, okay, these chances are very low, very low. There are chances, but the chances are low. But the chances of seeing a breakout are very high, or are very heavy. Okay, so this is how we are anticipating, or this is how we can anticipate the movement of the S&P 500. And guys, once again, okay, if there will be, you know, any abnormal movement, okay, or this is the parameter, etc., so I will do the daily analysis, okay. And if you are my community member, so I will give you this the video analysis, and this the notes, okay, and I will tell you what is going to happen and what is not, and how to safeguard, and where exactly this lower high is going to form, so that you can, you know, enter into the market and you can sell. Now guys, there is one more important thing, very important thing that I forgot to tell you, okay. This is related to my YouTube community, that recently, okay, I have started this the comment section in my YouTube community. Now what is the purpose of this the comment section? The purpose of the comment section is to bring all comments at one place, because this the comment, because the information that is there in the comments, okay, people ask me, my members, they ask me a lot of questions, okay, and I answer their questions, okay. So that is a very valuable information. So guys, once again, if you have not joined my YouTube community, then you can use the link in the description or in the comment section, and you can join my YouTube community, okay. Other than that, guys, hit like. If you have liked this video, then hit like, okay. And if you have any questions that you want to ask, then do not hesitate to ask. Simply write your comment, okay. Simply write your question, okay, in the comment, and I will try to answer your question. And guys, again, one more, and guys, again, if you are not subscribed to the channel, then please subscribe the channel, and you will get this the valuable information, weekly technical analysis, and each and everything. So guys, once again, like, share, comment and subscribe. So guys, this was my SP500 weekly technical analysis for the week of September 6th, that is from Tuesday September 6th 2022 to Friday September 9th 2022.